We got Marcus. He's calling from Alabama.
Okay.
Good evening, Joe and Big Al. This is Marcus from Alabama. Roll Tide. Oh, boy.
Exclamation points.
Yeah,
In caps.
all caps.
Yeah, right.
Marcus.
Yeah. But big fan of the show.
Big fan. He's a big fan of the show. Keep up the excellent work and providing funny but practical financial information to millions upon millions. Thank you, Marcus. I think it's two of you.
Well, even he says this might be an overstatement.
Little bit. I believe this was covered earlier this year, but can't recall the episode, so here's my request. Can you explain estate tax, gift tax, and current allowable gift exemption rules? There's confusion on how and when the gift tax and gift exemption rule applies. Let's say Marcus has got $5 million net worth. I'll give away $500,000 to an individual, non-spouse, which is clearly over the $15,000 limit. Do I have to pay a $485,000 gift tax, or is this subtracted from the current lifetime exemption of $11 million? In general, if one doesn't plan on having a net worth of $11 million, should there be concern as to the amount of money one gives away to an individual in a year or over their lifetime? Disclaimer: the above scenario is purely for educational purposes only. I do not have $5 million net worth yet. Thanks.
Coming.
Marcus, sounds like Marcus is in the business.
Yeah, he's planning on making some big money.
Yeah, he's a financial planner.
Right.
He's like, damn it, I got a client calling me.
How do I answer
How
this?
do I answer? Because this is a very sophisticated question Marcus has got going on here.
Yeah.
So ask these guys.
It's also very specific.
Yeah, very specific. So Marcus is in the profession, and he gets a call from his client in Alabama. And he's like, son of a... I don't know the answer.
How do I answer
How do
this?
I do this? He's looking all over. He's on our website, and he's like, screw it. I'm just going to...
I couldn't find your episode.
I'm just going to...
Just say it again.
Yeah, just say, hey, I need some help.
Right.
Yeah.
It's good. It's a good question.
Yeah. Cool.
Yeah.
Well,
So I'll answer it.
all right.
So, Marcus, you are correct. It's a little over $11 million exemption right now. So what that means is if you were to pass away, the next generation can get $11 million of your assets with no estate tax.
No death tax.
No death tax, correct. And if you're married, husband and wife can each get $11 million. It's like $11.2 million, roughly. So call it $22 million that can go to the next generation tax-free. So if you think you're going to be over that $11 million, one of the things that you can do is you can start giving it away before you pass away. And so the IRS thought, well, we're going to have these rules because otherwise everyone could give everything away and then not have to pay any death tax on it or estate tax. And so they said, all right, so we'll let you give right now $15,000. We'll let you give $15,000, no questions asked, to anyone that you want to. But if you give more than that, you got to file a gift tax return because we don't want you getting out of paying this estate tax. Okay, so that's why these two things are related. So if you give away $500,000, then you file a Form 709, which I actually have right here. And I'm not going to go through it because it is way too complicated to go through on the air, but I'll give you the essence of it. A Form 709 is what you file each and every year you give more than $15,000 to any one recipient. And so in your example, you give $500,000 away to somebody. So you subtract out the 15 because you're allowed to give that. So what's left is $485,000. That goes on the return. And in essence, it gets subtracted from the $11 million. It's actually done in a different way. That what really happens is the $480, you compute the gift tax on that and it's subtracted from your unified credit. But no one understands that, including accountants. So I'm just going to say...
It's the inverse of it.
It's the inverse. I'm just going to say that's roughly it, right? Basically, you're taking some of that $11 million exemption and you're giving it early.
Yeah, if you're taking like the CFP or CPA exam, it's the inverse. So you actually need different numbers.
Right.
But for this show...
Yeah, for our ability
I don't know.
to explain. Anyway, so I think that's probably the best way to explain it and think about it is you're basically giving some of your $11 million away early. And so why would you want to do that? Well, you would want to do that a couple reasons. One is if you felt like the $500,000 you were going to give away is going to grow in value, then when you give it away, it grows in the person you gave it to's assets, not yours, right? And the second reason you would do it is, you know what, this $11 million has only been just a couple of years. I mean, it was $5 million just a couple of years ago, and it could go back to $5 million. It could go back to $1 million at some point. So you give it away now while it's still an exemption. So those would be a couple reasons that you would do it. Or if you felt like Marcus and or his client was going to eventually make a lot of money, then yeah, you could start doing that right now.